Hey guys, so I actually bought some stocks this week. Let's talk about it. So if you're new to my channel, I show my portfolio every single week or close to it. You'll see all the stocks I own, the profits, the losses, my plans going forward, and then, I just sort of talk about my portfolio as a whole and, let you know how it's going. So this week I actually bought some stocks. Well, before I get into that, let me go over my portfolio itself. This is it. I own a lot of stocks, which is, akin to my name, Stock Overflow, and I'm not mad about that. And you will find that it is, overall, it's doing pretty well. I got about just over 56 grand in my portfolio right now. Every month, I put in $1,400 into my cash, and from there, I devote that money to stocks as I see fit. Now, I'm not going to go over every single stock in my portfolio, because as of right now, I have 20. I know 20 is a lot, but I keep track of all of them. But I will say that most of the stocks on my portfolio are stocks that, boring stocks that I can't make YouTube videos that will actually get views. Like, for example, if I sort this by percentage of account, my biggest holding is Cisco, and it is a stock that I'm doing very well in. I got 28%, and this is a stock where I'm earning dividends. I can't make a YouTube video on Cisco and have it raking the same views as a video on Gevo or Hyliion, but it's my biggest stock. AT&T, that rakes into views, but FedEx, this is a video. I made a video on FedEx about a month or two ago, and we're already sitting very pretty in the stock. I'm very happy with how it's doing. Tapestry, I 3x my money a while ago, and it right now is sort of stagnating where it is, but it's got huge growth potential over the next 3 to 5 years. I'm very happy with where I am now. ARK is sort of clawing its way back up. Revolve is a stock that I recently 5x, and the stock just keeps going up. Like, I am very, very happy with my position in Revolve. And like I said, most of these stocks are boring stocks. I consider myself, I'm not strictly a value investor or strictly a growth investor, but I do consider value in every stock I own. Even stocks that I buy for purely growth purposes like Hyliion and Gevo. Even that I consider value. I didn't buy Hyliion at, $22. I didn't buy Hyliion at $20. My cost basis is $11.76. My cost basis in Gevo is $6.62. Again, most of my other stocks are boring stocks, and that's the way I like it. So what did I buy this week? So this week, I bought some AT&T. Bought some more AT&T because I wanted to get in some of that dividend money. I also bought Gevo. And as you can see here, I bought Walgreens, which we're going to talk about a little bit later. But, so, the thing with Gevo is that, if we scroll down here, we order this right here. Gevo is a stock that I bought at $6, and then it went up by a bunch. And I made a bunch of videos on Gevo, which you can watch up here. And basically, I didn't want to get too greedy as far as, I had a position, but it wasn't fully built. I wanted to wait for the stock to drop to $6 before I bought any more shares. But I didn't want to get too greedy in that, I don't want to, as the stock kept going up and up and up, if Gevo eventually goes up to $20, $30 more the next 3 to 5 years, like, I didn't want to be the kind of guy that, being all stingy, oh, I didn't want to buy Gevo because it was $7.50 instead of $6, right? So I bought 50 additional shares at $7.50, and lo and behold, as soon as I bought it, the stock dropped some more. So I bought an additional 50 shares. Right now, Gevo is to the point where if this is the bottom and Gevo goes up from here, I'm happy with the shares I have. However, if it does drop below $6, I can't continue adding more shares. Hyliion, now this was a position that I was down a lot on, and then I was up on, and then just this week, I think starting Tuesday or Wednesday, it fell right back down to the negatives. Now, the thing with Hyliion is, as much as I'm into Hyliion and I believe in their long-term vision, I can't bring myself to add any more shares, and so until they start turning a revenue, not just not a profit, that's years out, but a revenue. And until Hyliion brings in some actual revenue, I'm happy with the shares I have. And now that we got through all that, let's talk about my newest position, Walgreens. Now, Walgreens and CVS are stocks that I've been looking into for a while. See, the thing with my portfolio is that a lot of my stocks are tech related. They have something to do with tech. Now, my background is in tech, so it's something I gravitate towards. And that was fine for a while. However, I've been wanting to branch out. So I've been wanting to buy a new position that had nothing to do with tech. CVS and Walgreens have pretty easy business models. They have a retail portion and they have a retail pharmacy portion. And now there's probably a little more to it than that, which I read under 10K, but that's the gist of it. A retail section and a retail pharmacy section. That's most of their business model. So before I go into the stock itself, I want to tell you what I was looking for in this position. Now, I am not looking for a 5Xer or a 10Xer. I already have my stocks that I bought for those purposes, Gevo and Hyliion. What I want is a nice stable stock that's been undervalued, that pays decent dividends, that will continue to pay decent dividends, that will continue to raise their dividends over a period of time. And Walgreens and CVS seem to fit that bill. I've never been involved. I don't have any consumer staples stock, so I figured this might be a good opportunity to branch into one. Now, one thing I do look for, like I said, in these stocks is I like stocks that have gotten the crap beat out of it. I like stocks that have fallen on very hard times, but have massive turnaround potential. And if you paid attention to Walgreens earnings, recent earnings that they had, I think yesterday or the day before, you will know that Walgreens plays exactly into what I'm looking for. Now, if you take a look at Walgreens compared to CVS, Walgreens has a forward PE of 9.9, which is better than the forward PE of CVS, which is 11.24. Now, I'm going to say right now that I like both of these positions. I like both of them. However, I was only going to pick one. I like both of them. The PEG ratio for Walgreens is higher, but the price of sales is comparable. It's actually a little better than CVS. Now, what ultimately led me to Walgreens instead of CVS is their dividend history. If we take a look at Walgreens' dividend history, you will note that they have been consistently raising their dividends by the year for a while. If we take a look at CVS, although, their dividend payout is higher, they have not been raising their dividends since 2017. So that alone sort of turns me off from CVS for the reasons I wanted to buy a consumer staple stock. So the fact that they're not raising their dividends, that was a deal breaker for me. Despite the growth potential that I see in CVS over a period of time. Their PEG ratio does look a lot more attractive than Walgreens. A lot more attractive than Walgreens, but I don't want to buy this stock for massive growth. Just comfortable growth over a long period of time and, steady raising dividends. So if we take a look at, now this is a snippet from a CNBC article talking about Walgreens' latest earnings report. Now I would highly recommend, if you're interested looking through Walgreens, that you research them thoroughly. I will not be responsible for you blindly following what I do and you losing your money as a result. I will not be responsible for that. Do your own research. But anyways, part of the earnings report is that, so they beat, and they raised their outlook. As far as earnings per share, $1.51 adjusted versus the expected $1.17. That is phenomenal. That is one hell of an earnings beat. Revenue, $34 billion versus $33.7 billion expected. Now this is key. In this quarter, Walgreens posted a net profit of $1.2 billion, compared with a net loss of $1 billion this quarter last year. So again, Walgreens and stuff, they were all drastically affected by COVID last year, just as most brick and mortar physical stores were negatively impacted by COVID. So this is understandable that they will lose so much, but this right here shows that Walgreens is coming back with a vengeance. And they also raised their guidance as far as EPS from mid to high single digits to around 10% adjusted EPS growth. You would think that with a triple beat, the stock would have exploded, right? No, the stock market did something very stupid. And it's been doing this a lot. Since February, there have been lots of earnings, even FedEx, that have beat. That, by all accounts, should have exploded. But even with the beat, Walgreens still dropped. We're talking since earnings. That's an 8.4% drop. That right there is a perfect situation for me. a stock with strong financial growth behind it, you know, coming back from the pandemic. I think they, you know, investors sold off because of the whole vaccination boost will fade, whatever. You know, short-sightedness, but perfect scenario. Strong company, stock got the crap beat out of it. I mean, it was just perfect timing. Now, granted, Walgreens does, now this is the quarter before, it does have a little bit of debt. However, if we take a look at their actual 10Q by this quarter, I mean, this rate, short term and long term, this adds up to only $15 billion in debt. So I don't know where they got this number from. But we got $15 billion in debt as of last quarter. But there's some more good news coming. After this reported quarter, they completed their sale of Alliance Healthcare for $6.5 billion. So that means they're going to get $6.5 billion, which they're going to use to pay off their debt. Now, since the last reported earnings, which is at the end of May, they sold this. They've already paid off part of their debt by $3.3 billion, and they're going to use this $6.5 billion to pay off more of their debt. So I'm pretty comfortable with Walgreens as of right now as far as their debt is concerned. And not only that, they also have some growth initiatives that they're working on, such as the pharmacy automation. Now, imagine being able to walk into a Walgreens, not having to talk to a human being, and being able to get your medication or stuff just like that. And they're also working on some things on the retail side, such as this customer engagement platform and their Walgreens advertising group. And they're also launching a credit card service in early fall. So, again, you know, this isn't exactly earth-shattering news or anything as exciting as Gevo or Hyliion, but I mean, it is consumer staples. It is something that, you know, people will always need. And the fact that a business is making this better from the retail side and the pharmacy side, I mean, that just means the money's going to keep coming in. So as long as Walgreens keeps growing in any capacity and keeps raising their dividends, I'm perfectly happy. But anyways, that's the update for the week. Take care, have a great day, and eat your vegetables.